Okay, come on. Tell. Tell what did you work out?
Yeah, one second. Yeah, so basically, 60,000 is the budgeted units,
Yeah.
and 15,000
Budgeted
is,
units is 15,000
yeah, sorry, overheads is 60,000 and units is 15,000. So you'll divide it to get OAR, which is $4.
per unit.
Yeah. Then
Okay.
उसके बाद I multiplied.
OAR is $4
Yeah.
per unit.
I multiplied
Absorption
4 with.
costing, you take total cost into consideration, and marginal costing, you take variable cost into consideration. Yeah.
Yeah, but I multiplied 4 with 14,000 units to get actual. So 56,000.
You
And
multiply 4 with,
yeah, multiply.
hmm. So you got
And then I get 56,000. So 56,000 is the actual amount, is the actual overheads, and 60,000 is budgeted. So it is
56,000 is the actual
yeah,
overhead,
and 50,000 is the actual is the budgeted overheads.
and budgeted overheads is
So 4,000
one minute.
budgeted is,
Budgeted overheads is 60,000, and
yeah.
actual
So
overheads. Or this would
huh,
be budgeted overheads for actual production.
that only, miss.
No, actually something different, na? So 56,000 is budgeted overheads for actual production, and this is your
Yeah,
budget.
yeah,
Yeah, so
yeah. So 4,000 का difference है. So budgeted is greater than actual.
budgeted overheads is greater than budgeted
Actual.
overheads for budgeted production is
Yeah.
greater than actual overheads, budgeted
So
overheads for actual production.
4,000 over absorbed.
But this is not asking over absorb under absorb.
Sorry, 4,000 decrease in profit.
4,000 decrease in profit. Did you read the question? You're getting the correct
Yeah.
answer, but with a wrong logic.
No, miss, I read the question.
Okay. The company now decides to apply marginal costing. What does the company decide to apply?
Marginal costing.
Okay, in marginal costing, when you're doing absorption costing and marginal costing, there is a difference in profit only because of what?
The fixed cost.
Fixed cost included in
Closing inventory.
the fixed cost included in the closing inventory. What is the closing inventory?
1,000 units.
1,000 units. 1,000 units is my closing inventory. And what is the OAR per unit? Fixed overhead, fixed cost
4,000.
into $4. So 4,000. Okay. Now, what is happening in absorption costing? You took full 15,000, and in marginal costing, you will do only as per 14,000. Absorption costing takes the total into consideration, and this only takes the variable element into consideration. Okay. So there will be a difference of 4,000 units. In marginal costing, the profits will be less by 4,000. Why less by 4,000?
Because budgeted sales were less than the budgeted production.
Because in absorption costing, the 1,000 units of closing inventory was valued at variable cost plus fixed cost. Closing
Okay.
inventory is equal to income. Okay, whenever you
Yes.
think about closing inventory, you say income. Okay, so in absorption costing, my income was overvalued by 4,000. But in marginal
Okay.
costing, the same 1,000 units was valued at variable cost only. So in absorption costing, my profits was 4,000 higher. Why 4,000 higher? Because the closing inventory was valued at variable cost plus fixed cost. And the fixed cost is 4,000 for these 1,000. In marginal costing, my profits or my closing inventory was valued only at variable cost. So the profits was 4,000 less. So the effect on profit is 4,000 decrease. Please tell me if you understood the explanation. I can re-explain the explanation.
Yes, miss, I understood.
Sidra? Sidra,
Yeah, miss, I got it.
you got it? You got the correct answer. But it was a
Huh.
very long explanation.
Yeah, miss, but then no, but I'm saying that the part till I found OAR and I multiplied to
Yeah,
get
see
that
here it is correct.
that
But how you
huh.
were fixing it was wrong.
Yeah, okay, my bad.
It
Now I
was
understand.
it was only because of the 1,000 units of closing inventory, which is used in valuation over here and it is not used over
Huh, yeah.
here. Okay. We did the 28th, now this is the 29th one.
This was in the mock also.
Yeah.
Yeah.
The data relates to the production of 3 products. Contribution per unit, fixed overhead per unit, labor hours per unit. Company is experiencing a shortage of labor. In which order should the product be ran to maximize profit? I have shortage of what?
Labor.
Labor. And I want to find what? Optimum
A
product
maximum.
plan. What do I want to
Yeah.
find?
Optimum product plan.
So I will find out the contribution per
Limiting factor.
Limiting factor.
limiting factor. So I'm going to find out the contribution per
Limiting factor.
what is a limiting factor? Direct
Labor
labor
hour.
hours. Come on, find the contribution per direct labor hour.
One 160, 140, and 253.
You're doing this divided by this, na?
Yeah. Contribution per unit divided by labor hours.
Yeah. So 190 divided by 0.75 is how much?
0.75, huh? 253.
253.33. In which order should you make the products?
Z, X,
Z.
X,
Z,
Y.
X, Y.
So which order? C.
C.
Done.
So, yeah. C. Yeah.
Let's go to the next one. This is May June paper 13. What was that? May June paper 12. May June paper 13. Only costing something. Which one? 25.
Yeah.
What is the cost per unit? Try. What is the direct material cost per unit? What is the direct material cost per unit?
0.
Sorry,
Mm,
8,000 units.
0.4.
20,000 units will require 8,000 material.
Yeah, so 0.4 no for direct material.
Now direct labor. You're making 20,000 units, and to make 20,000 units, you need 400 direct labor hours.
Yeah,
So for 1
6,000.
unit, you will need how many direct labor hours? Just cross multiply. 20,000 divided by 400. So for 1 unit,
50.
you need 50 labor hours. 50.
Yeah.
You need 50 labor hours. Now find the cost per direct labor hour. You are paying 6,000 for 400 labor hours. So what is the cost per direct labor hour? 15. So for 1 unit, I need 50 labor hours. And cost per direct labor hour is 15.
15.
So for
Yeah.
1 unit, what will be my direct labor cost?
750.
No, there is some glitch.
Miss, wait, I think you miss then 150% of the cost of direct labor is absorbed.
Oh, that's for overheads, na?
Acha, okay.
There is some glitch in the direct labor hours. To
Direct
make,
labor.
okay, wait. 6,000 is the cost for 400 direct labor hours. So find cost per direct labor hour, how much?
0. No, 1 second. Um,
15
yeah,
per
15.
labor.
Labor hour per unit is 15 only.
No, cost per direct labor hour.
Yeah, sorry, that is 15.
What is the units?
20,000, no? So, yeah, 20,000 is the units.
So it will be 400 divided by 20,000. Labor hour per unit will be 400 divided by 20,000, not 20,000 divided by 400. Cross multiply, it is 0.02. For 20,000 units, you need 400 direct labor hours.
Acha, okay, for 1 unit, how
For 1
much?
unit,
Yeah.
how much? So 1
Huh.
into 400 divided by 20,000. So what
So
is the
50,
direct labor per unit? Yeah,
0.3.
it is 0.3. Now overheads are absorbed 150% of the cost of direct labor hour. So 0.3 into 150%.
0.45.
0.45. So now tell what is the total cost.
0.45 plus 0.7. 1.15. 1.15.
Is it there in the option?
Yeah, miss. D 1.15, yeah, no?
So 25 option is D.
Yeah.
I hope you
Wait,
understood the glitch over here is labor. Yeah,
Yeah,
tell
that.
Arish, tell.
how did we get 0.3?
Okay, look over here. To make 20,000 units, you need 400 direct labor hours.
Yes, miss.
So to make 1 unit, how many direct labor hours? So cross multiply. 400 into 1 divided by 20,000. So to make 100 units, to make 1 unit, You will need 0.02 direct
Yes,
labor.
miss.
Now, for 200 direct labor hours, you have spent $6,000.
Yes, miss.
Okay. So that means for one labor hour, you will spend how much?
So 6,000 divided by 0.02.
So you will spend $15. No, 6,000 divided by 400.
Oh, okay.
You have paid
Divided by
6,000 for 400 hours. So how much per hour?
150.
15.
Yeah, 15.
15. Now to make 1 unit, you need 0.02 hours,
Yes,
and you are going to pay $15 per direct labor hours.
yes.
So then you multiply this into this.
Okay, miss. Understood.
So direct labor is 0.3 and overheads is 150% of the direct labor cost. So the total is 1.15.
Yes, miss.
Okay, are you with me?
Yes. Yeah.
Next one, 26. What is the variable cost per unit? Try. Now I'm tired. Huh? Fixed cost is 6,000. So at break even, you will have zero profit, zero sales, and break even sales revenue is 15,000. Unit selling price is 10. So 1,500 units. Are you with me?
Yes, miss.
Look over here, your break even sales revenue is 15,000 and your selling price per unit is 10. So what will be your break even sale units? 1,500.
Yes,
Yes?
miss. Yeah.
Minus variable cost gives you contribution, minus fixed cost gives you profit. Are you with me?
Yes.
Fixed cost is 6,000. So contribution will become how much? At the break-even point, your fixed cost is equal to contribution. Yes?
So 6,000. Yes, so 6,000.
So what will be the variable cost?
The variable cost would be
6. So D.
Hare, I want the total. First give me this answer.
Acha, 9,000.
9,000 divided by 1,500.
Miss 1 or 6?
Yeah. So tell me, variable
Yeah,
cost
so
per unit 9,000 divided by 1,500 units. So it is going to be how much?
6.
6. So option D. Do you know how did I do this right? You all know how I did this right?
Yeah, miss.
yes, miss.
Come on. Whenever sums of marginal costing comes, you just do like this, you will get everything. Over absorption, under absorption. Business absorbs at the rate of 10.5 per direct labor hour. Budgeted overheads, actual labor hours. What is the value of under or over absorbed? So first find value of under or over absorbed. You're going to take 10.5 per direct labor hours. So what do we do? Budgeted overheads for actual production, it is compared with actual overheads. Are you with me?
Yeah.
Yes, ma'am.
What is your budgeted OAR?
10.50.
And actual production is
60. Oh, wait. 5976. Yeah, you'll multiply those to get 62,748.
what is actual overheads? Actual overheads is
5,000.
66,175.
Yeah.
Budgeted overheads per actual production is how much?
1 second. 62,748. 740.
62,748.
Yeah.
It is compared
So
with
under.
66,175.
So it's under absorbed by 3,427.
So I thought that I will recover this much, but I recovered this much. But I absorbed this much. Actual overheads is this much. So it is
Option
under
D.
absorbed. I
So option
recovered
C.
only this much.
Yeah,
How much is
option
the
D.
difference?
3427.
3247.
3427.
Yeah.
So when you calculate under absorbed or over absorbed, what do? You calculate the budgeted OAR
And
and
multiply
multiply it
it
with
with the
actual
actual product.
production.
And then
Okay.
compare it with the actual.
Then we can compare it with the actual overheads. Okay. If budgeted minus actual, if the answer is negative, then it is under absorbed. Are you with me?
Yes, miss.
Let's go to the 29. No, 28. Company uses direct labor rate 5.40 per hour to absorb production overheads. Each unit of a product manufactured requires direct labor hours. Actual production overhead under absorbed production overheads. Okay. Budgeted OAR into actual production minus actual overheads. The answer is negative. That is why they say it is under absorbed. Are you with me?
Yeah, miss.
So under absorbed is how much? 32,400.
32. Yeah,
The
400.
answer is negative, right?
Yeah.
Actual overheads is how much?
518,000.
580,
Yeah,
400. So
400.
budgeted OIR into actual production will be how much?
Uh, 55, 800. 55, yeah, 550, 800.
486,000, no?
Uh,
This minus this, the answer is negative, na?
acha, you want negative. My bad. Yeah.
486,000, check again. Minus 518,200. 32,400. Yeah? This I took
Yeah.
budgeted OAR into actual production minus actual overhead. I got under absorbed. If it's the answer is negative. If the answer is positive, it would be over absorbed. Now I
Yeah,
got
miss.
this equation of budgeted OAR into actual production is how much? 486,000.
186,000.
What is my budgeted OAR?
5.4. So yeah, you will just divide it.
Check.
So 90,000 units.
486,000 divided by 5.40. So it is 90,000.
Yeah.
Now I will tell you one thing. The answer is A.
Yeah. Miss what?
Yes. The answer
Actual,
is A.
actual output of the product in the
It is
period.
budgeted overheads. Budgeted overheads is 5.40 per hour.
Yeah.
But I want units.
Okay, so you'll. Okay,
So
fine.
this is 5.40 per hour. So here when
Hmm.
I'm multiplying, it is 5.40 per hour. But I need actual production or
In
I need
units.
actual hours.
Ah,
How will I get the actual hours worked?
actual hours work. Yeah,
The actual production overhead divided by the direct labor rate.
Actual
how
production
much?
overhead 518,400 divided by what?
The labor rate 5.40.
Okay. 518,400 divided by 5.4.
That'll give you 96,000.
So,
But it takes 4 hours.
hmm? Yeah, for actual
Um,
production, 96,000. 96,000 into 5.4.
But
I
how
need
is that of use?
hmm?
Yes, how is that of use?
Okay, wait. So actual hours worked I will get now. Actual hours work will be 486,000 divided by 5.40. So tell how much? 486
90,000 we got.
divided by 5.40. No, but this 90,000. So
But
90,000 is actual
hmm,
hours worked.
yeah.
So 1 unit requires dash hours and I have worked for 90,000 hours. So in 90,000 hours, how many units did I produce? So 1 unit requires how many hours? That you find?
4.
Hmm.
Oh my God.
Each unit of product manufactured requires 4 direct labor.
Yes. Each unit of product manufactured required 4 hours. So in 90,000 hours, how many units will I make? 90,000 divided by
90,000
4.
divided by 4. Yeah, 225, 500.
90,000 divided by 4. So I will
Hmm.
make 22,500 units.
Miss, so this 5.40 is it's not
See
OAR,
now,
right?
but see now it is OAR. But OAR is
Okay.
giving direct per hour. So
Okay.
budgeted overheads into actual activity levels, you will take actual hours worked.
Yeah.
And then I will use this information to find out how much units. I'm giving you time, do it again. Now let's do 29. A company sells a product for $12 per batch. Variable cost is $4. Fixed costs are absorbed on the basis of a normal activity level of 100 batches at $3 per batch. So can you tell me the fixed overheads? Can you tell me the fixed
300.
overheads? The total fixed overheads? If I am doing an activity level of 100 batches, my fixed overhead per batch will be $3. So the total fixed overhead budgeted one is $300. Are you with me?
Yes.
The profit under marginal costing if the company makes and sells 125 batches. I want to know the profit under marginal costing if I make and sell 125 batches. So what format will I make? What format will I make?
Yeah, much I got it.
Profit. What will be my fixed cost that I will take? 300. Sales. 125 into $12 per batch. Variable cost is 4. Contribution will be how much? Contribution will be 8. 8 into 125 batches will be my total contribution. That will be 1000. 1000 minus fixed cost 300. What will be my profit? 700. Yes. The only point that people would mess up is they will do 125 batches into fixed cost $3. People mess up like this and they make the fixed cost as 375. Are you with me?
Yeah.
Arij?
Yes, miss.
The only difference where people are going to get confused is here. Okay. This is not a part of your syllabus. So we did how many papers today? We did 3 papers today, okay? Which 3
Yeah.
papers? We did May, June 2014, paper 11, 12 and 13. But only sums related to costing, marginal
Yeah.
costing and absorption costing. This is done in 2 videos. I will upload on YouTube, 1 and 2. Okay?